Today we are to solve winter 25 series question. First of all, we will solve question paper 4-2 and we are to start question number 1. Question number 1 is of budgeting. In this question, some information is given, and first of all, in A part we are asked state two benefits of preparing a cash budget. Students make a mistake that they write benefits of benefits of budget. So this is a general answer. You should avoid that answer because they have specifically asked you to write benefits of cash budget. So what are the benefits of cash budget? Cash budget is a future plan of cash. So it tells us whether there is any shortage of cash in future or not. Is there any liquidity crisis, liquidity issue that may have to face by the organization, and if there are any surplus funds which are idle, where to use those funds. Second is write two benefits of preparing a production budget. So students, production budget, why do we prepare a production budget? Number one, first of all, we have to plan the production so that the business is able to meet demands of customers. And second, for the production plan, business has to arrange the resources. So production budget helps us to meet demands of customers as well as to arrange resources for the production plan. In B part, it is required to prepare production budget for April, May and June. Students, generally the formula to prepare a production budget is, first of all, we write units sold, then we add closing inventory units, subtract opening inventory units, and lastly we get units produced. Information 3 tells us about the production planning. Production of goods takes place 1 month before sale. It means the units to be produced, to be sold in April should be produced in March. Units to be sold in April should be produced in April. Units to be sold in June should be manufactured in May. But the second sentence says inventory of finished goods will be 5% of next month's sales. Now students, these two sentences contradict each other. At a moment, either a business can follow first sentence or can follow second sentence. So in my opinion, this part of the question cannot be solved. So because this is wrong question, this cannot be answered. Now students, in the next part we are asked to calculate the payments to suppliers for each month, for each of the months of April, May and June. Now because payments to suppliers depend upon units produced, so if units produced cannot be calculated, so this part's answer will also be wrong. But using the units produced uh, given by the mark scheme, we can calculate payments to suppliers, although the question is wrong. April, May, June, March. So students, units produced in March as given in mark scheme are 3235, in April 3095, and in May 2995. It is mentioned in the question that each unit requires 3 kg of direct material. First of all, we will multiply units with 3 so that we can convert this into kilograms. So 3235 multiplied by 3 will be equal to 9705 kilograms. Similarly 9285 kilograms, and 2995 multiplied by 3 will be equal to 8985 kilograms. First of all, we will convert it into the purchases budget. So we will add closing inventory kilos and subtract opening inventory kilos. As mentioned in the question, G Limited keeps a base inventory of direct material. The base inventory at the end of February is expected to be 8 months. So if closing inventory of February is 800 kilos, it will be opening inventory of March. And it will remain same till May. So will remain same at the end of the March. Will remain same in April. And at the end of May, as mentioned in the question, it will be 600 kg. While at the start of the May it was 800 kg. So purchases budget will be equal to 9750 plus 800 minus 800, so it is 9705 kg. This will remain 9285 kg, and this one is 8785 kg. Now students, the price of each kg is $8. So we will multiply to convert it in dollar values. So this will be 77640. This will be 74280, and this will be 70280, and now these are dollar values. Now students, we purchased in March material worth $77,640, and when was it paid? Purchase of direct material are made in the month of production with the credit period of 1 month. Credit period of 1 month means material bought in March will be paid in April. This amount will be paid in May, and this amount will be paid in June. Now students, let us move to the next part. In this part, we are asked to prepare a cash budget. In cash budget, first of all, we write here receipts. Now let us try to calculate the amounts received in each month. Before we solve this part, first of all, we need to calculate the amounts to be received in each month. In February, there was a sales of 2600 units as mentioned in the question. And the selling price of each unit is $80. So if we multiply 2600 into 80, its answer is 208,000. So this is the value of goods to be sold. And students, in the question it is mentioned that all sales are on credit and customers are given 2 months credit. However, 3% cash discount is allowed to those who pay within 1 month. It is estimated that 25% of the customers will settle their accounts within 1 month of the sale. That means 25% of the customers will pay in month 1 and remaining 70% will pay in second month. And those who pay in first month, which are 25% of the total customers, will also receive a cash discount of 3%. Now it means 25% of this amount will be received in March and 75% of this amount will be received in April. 25% of 208,000 is 52,000, while 75% of this amount is 156,000. And students, because those who pay us In first month we'll also receive a 3% discount. It means we will receive only 97% of the total amount. So 97% of this amount is 50440, because 3% cash discount is allowed, so we will not receive the full amount, we will be receiving only 97%. So from February sale, this amount will be received in March and this amount will be received in April. Now let us calculate the values of March sale. In March, units to be sold are 2500, which is given here, and selling price remained same, and 2500 into 80 is 2 lakh. Again 25% of the customers will pay in month 1 and 75% of the customers will pay in second month, and 25% of 2 lakh is 50,000 and 75% of this amount is 150,000. And students, the customers paying in first month will also receive a 3% discount, giving a net 97% of the amount to us, and that will be 48,500. Okay, now from March sales, this amount will be received in April and this amount will be received in May. In April, business was able to sell 3200 units as mentioned here. $80 is the selling price per unit, so dollar value of sales is 256,000. 25% of the customers will pay in month 1 and 75% of the customers will pay in the second month, and 25% of 256,000 is 64,000 and 75% of 256,000 is 192,000. And again these customers will receive a 3% cash discount, giving a net 97%, which will be 62080. So from April sales, this amount will be received in May and this amount will be received in June. Now let us calculate units to be sold in May are 3100 and it is also mentioned that selling price will increase by 5% in May. So if selling price previously was 80 and 5% of 80 is 4, so the new price will be equal to 84. So we will use selling price as 84. So 3100 into 84 is equal to 260,400. 25% of the customer will pay in after 1 month and 75% will pay after 2 months. So 25% of 260,400 is 65,100 and 75% is 195,300 and we will receive 97%, that will be equal to 63147. And from May sales, this amount will be received in June and this amount will be received in July. So students, when we have to write the values in cash budget, we will write from February sales we are receiving 5440 in March and 156,000 in April. So because we are preparing only April, May and June, we will write here 156,000. From March sales, we are receiving 48,500 in April and 150,000 in May. Similarly, from April sales, we are receiving 62,080 in May and 192,000 in June. And from May sales, we are receiving 63,147 in June, while July payment is not required. So students, now let us get the totals of each column. So total receipts of April are 204,500, May 212,080 and June 255,147. Now let us move to payments. We have to pay amounts to suppliers. That have already been calculated, that 77640 will be paid in April, 77640 and 74280 will be paid in May, and 70280 will be paid in June, Now students, these values are based these values are based from the answers of C part, as we have already discussed that C part's answers are dependent on B part while the B part is wrong, and we haven't calculated uh, the units to be produced. So these answers are based on mark scheme. Now students, let us look at what are other payments in the question. Direct wages and variable overheads of 20 per unit are paid in the month of production. So the production units are based on mark scheme. We will be using the same figure, and it is 20 per unit. So wages and overheads. 61,900, 59,900 and 55,800. Now monthly fixed overheads are 58,000, and these include a depreciation of 6,000. So depreciation is not a cash outflow, that's why we will write only 58,000 minus 600, that is 52,000. And fixed overheads are paid in the month they are incurred and will be expected to increase by 7% from May. So in April these will be 52,000, while in May these will be increased by 7% and will become 55,640 and will remain same in June. And promotion cost of 20,000 will be incurred in April, so this will be recorded in April only. Now get the totals of payments only. So in April total payments are 211,540. In May it is 189,820. In June it is 181,720. Now we will calculate net increase or decrease. Students, in April total amount received is 204,500 and total amounts paid is 211,540. So amount received is less than amount paid, so the net amount is minus 7040. Opening balance at the start of April was 38,000. Now we will add here opening bank balance, that was 38,000, and the closing balance will become 30,960. Now students, closing balance of April will become opening balance of May, 30,960. Again we have to calculate net increase or decrease. Total amount received in May was 212,080 and total amount paid was less than receipts, and the net increase is 22260. So the closing balance is 53,220. This closing balance will become opening balance of June, and the net receipts of June are 255,147. Payments are less than receipts, and the net is 73,427. And by adding net increase in opening balance, we will have a closing balance of 126,640. So students, this was the cash budget. Now from here you can see cash balance is increasing each month. At the end of April it was 30,000, at the end of May it was 53,000, and at the end of June it is 126,000. In the next part we are asked, the directors think that they will have some surplus cash at the end of June which could be used for other purposes. They have two options. Number one, use this surplus cash to incur expenditure on developing a new product, or place the surplus cash in fixed deposit account and an estimated interest rate of 2%. Advise the directors which option they should choose. So students, you have to write maximum 3 points on option 1 and maximum 3 points on option 2, and then you have to write a recommendation or decision. So for option 1, why should we use surplus cash to incur expenditure on developing a new product? It may be existing product may have may be on at the end of its product life cycle. Developing a new product is important for the future of the business. Further costs may be incurred on development. Research and development may fail. It is risky. There are some advantages and disadvantages of option 1. In option 2, if we deposit amount at a fixed interest rate, it is less risky than option 1. Its income is fixed and guaranteed, but interest rate is very low and cash will not be available for a long term, and if inflation rate is more than 2%, so the real gain will be in minus. So at the end of these comments we have to write a decision. We have to give a piece of advice either for option 1 or option 2 with a comment. Thank you very much students. Allah Hafiz.